Welcome everybody to my Senior Management Group webinar. And the idea today is to show you some visuals on how to reverse mortgages work. Most of you people who are attending today I spoke to personally, and I got a chance to talk to everybody, and there's still a couple of gray areas when it comes to reverse mortgages. So what I'm going to do today is just give you a couple of graphics on the whiteboard and explain to you how these work from our beautiful Senior Management Group headquarters here in Belmore, Long Island. And I always start by saying that we operate differently than regular mortgage companies. We like making face-to-face appointments to sit with you and go over your personal needs and get to know you on a one-to-one basis and protect your personal information. Unlike the larger companies where you talk over the telephone, they send you the packages with the stickies that say sign here. With that being said, I have my computer here. If anybody has any questions as I'm going along, please feel free to text me or just send me the questions, and I'll be sure to answer them as I move along with with this seminar that we're doing. So the first thing I want to share with you is this. Like I said, this is visual, so you understand. If you see any of my podcasts or vodcasts that we do, the first thing I try to explain to people is that with a reverse mortgage, you keep title to your house. What that means is a reverse mortgage is like any other mortgage. The only difference is you don't have to make any payments every month. I'll explain to you about that in a second. But what I usually do when I have my seminars at the libraries or wherever we may go is I have a sign from the Consumer Financial Protection Bureau which says, if you take out a reverse mortgage, does the bank own my home? The answer is no. Okay? The bank does not own your home. You keep title to your house. Okay? Now we can move on. So everybody asks me, how do these reverse mortgages work and how much do I qualify for? So the best way I can do it is by giving you round figures, okay? So we're going to say that you have a house worth $500,000, okay? That's the value of your home, okay? You are 80 years old. So basically, rule of thumb, you qualify for roughly $250,000 if you're 80 years old, okay? Subject to change based on rates, okay? So now you see you have a $250,000 available limit that you could borrow. So people would say to me, well, how come I want to borrow money on a reverse mortgage? How come they're only giving me $250,000? My answer to you is you still own your house worth $500,000. So they're going to give you $250,000. If you would have paid off the next day, you only technically owe $250,000 plus a day's worth of interest. The other $250,000 is your equity. Okay, so that's why they only give you a certain portion, because what happens with a reverse mortgage is they're not going to ask you for any payments on this $250,000. Okay, what's going to happen is every month you're going to get a statement in the mail, and you're going to have a decision to make whether you want to make an interest payment or you don't want to. If you want to make the interest payment, you can, and it's called a forward. It's a forward mortgage. You keep on paying it every month. If you don't make any payments, this is a reverse. It amortizes backwards, so it's a reverse mortgage. Okay, so people will say, well, yeah, but 10 years from now I'm going to own a heck of a lot more money than I borrowed. And the answer is yes, you are correct. Let's pretend that you keep this loan for 10 years. You're 80 years old, and when you're 90 years old, you say, you know what, I'm going to sell the property, I want to move on. Okay, this 250 may go up to 350,000, maybe a little bit higher, we don't know. Okay, so you say, well, where'd the other $150,000 go? And that's interest. That's your interest payments that you kept in your pocket. You don't have to make any payments throughout all those years. So now what happens is the $500,000 10 years from now, your value of your house, remember this is the value, this may be $600,000, $700,000, or $800,000. Just think of 10 years ago what your house was worth, and think of 10 years that brings us to date what your house is worth now. Maybe this $500,000 house was worth $300,000. Now it's worth $500,000. So you got to look at the big picture with the reverse mortgages. This $500,000 10 years from now maybe $700,000, and you still have all that equity in your house. You sell a house for $350,000, you pay that off, and the rest of the money goes to you or your heirs, whoever it may be. Okay? The idea is also with this reverse mortgage is what were you doing with that $250,000? Many people invested it, paid off credit cards, high interest rate credit cards. You know what those credit cards would be if you were paying them off for 10 years? Okay, over here, probably about double or triple of this, because you know those are about 30%, as you know, if you have credit card debt. Okay, with that being said, now we understand that. I see I'm getting some questions already, so I appreciate that. I'm going to get to them. I'm going to get rid of this. People may also ask, okay, you're 80 years old. Okay, do I qualify for this reverse mortgage? And my answer is maybe. Okay, here's the way it works. If you're 80 years old and you owe $300,000 on your current mortgage, the answer is no. You don't qualify for a reverse because you only qualify for $250,000. But if you are 80 years old, your house is worth $500,000 and you only owe $100,000, you qualify for a reverse mortgage. Because if you take the $250,000 that you qualify for, out of the closing, we're going to pay off this $100,000, you're going to be left with $150,000 less your cost. Okay? So you qualify for this reverse mortgage. So we're paying off your $100,000 loan that you're paying every month until you're going to be about $100,000. And now you're not going to have any mortgage payments anymore whatsoever. All you're going to have is this $150,000 in the bank, and there's no more mortgage payments. And that's how you get to this point where now it's a reverse, and 10 years later or 5 years later, when you sell, you owe exactly what you pay plus your per diem interest. Okay? So in this situation, you qualify for the loan. Okay? You can't owe more than you qualify for and expect to get a reverse mortgage. And you should always have equity in your house. Now I got some questions that just came in. Linda from New Jersey, what happens when you pass away? Excellent question. Okay, let me erase this. Okay, so 5 years from now, you pass away. Unfortunately, you owe, instead of $250,000 or $300,000. Okay, the house is worth, instead of $500,000, maybe it's worth $600,000. Okay, what happens is the rule is you have 6 months to a year for your kids to pay off the reverse mortgage, whatever is due, and sell the house, or they can refinance it into a traditional mortgage and pay off the reverse mortgage bank. So again, you always own the house, like I said in the beginning. So what happens when you pass, your kids, your heirs, whoever it may be, take over the property, and they're going to be responsible to pay off the reverse. Usually, they're not in the house, they have their own lives, and they're going to sell the house, and whatever equity is left, see, they're going to walk away with it, whatever's left, and that belongs to them. And that's the end of the reverse mortgage. So my answer to you is, I hope you have a trust, or you have a will or something where it spells out who's getting the property. Your heirs will have to sell the house, or there's been a couple of instances where the people refinanced because they wanted to keep the house, which is fine also. 2, 3, and 4 families, investment properties, sometimes the kids want to keep it. So that's an option as well. Gloria from Westchester, I have a tax lien. Do I qualify? Well, it depends. In this scenario, if your tax lien is less than $250,000, you do qualify. We do a lot of loans. We're paying off these tax liens, which is every day pretty much. So if the tax lien is $100,000, $150,000, and it falls underneath the $250,000, the answer is yes, you qualify. Now, the nice thing about these reverse mortgages are, even with a tax lien, where a bank may say, you know what, that's considered bad credit, with our reverse mortgages, it's okay. We get a letter of explanation. Doesn't affect the loan whatsoever. So that's a good thing. I got another one in. Ed from New York City, can I make a payment if I want? Is there a prepayment penalty? That's an excellent question. Can I make a payment if I want? Is there a prepayment penalty? The reverse mortgage works just like a regular home equity line of credit or regular mortgage. Every month, you can get a statement in the mail. Okay? It's your decision how you want to go about it. If you want to make your interest payment or your principal payment, you could do so. If you just want to make no payment whatsoever, some people do that. That's okay. And that's when the mortgage grows with the negative amortization, which is okay because, like I said, the chances are you're doing something with your money, paying off credit card debt, investing it, or doing something. Giving it to your kids, whatever, home improvements. So, and I always like to think that, especially in this market, which is really, really good, especially in the areas we're licensed in, this house is going to go up in value over 5 years also. So my answer to Ed is yes, you can make mortgage payments. There's no prepayment penalty. I've had people pay off the loan a month after they got it because they inherited money from somewhere else or they sold another property. So it's not a problem whatsoever. Here's one. Ralph from Fort Lauderdale. Can a commercial property qualify? The answer is yes. Okay. It depends. If it's 50% residential, the answer is yes. We have done many commercial properties, especially in New York, where you have 2 apartments in a store or 1 apartment in a store. Yes, the answer is yes. You do qualify for that. Depends on the property, but the answer is yes. Okay, I have one. Barbara from East Hampton. Okay, what is the difference between a home equity line of credit and a reverse mortgage? That's an excellent question. They're basically one and the same. They're both treated the same. It's a line of credit which you borrow from and pay back whenever you want. The difference is a traditional home equity line of credit is very difficult to qualify for. I don't even know if many banks are even doing it anymore. Back in the day, I had one myself with Fleet, if you remember that, back about 25 years ago. And what happened is after a while, they shut it down. They canceled it. And they rolled it into a regular 15-year loan. So they froze it. The good thing about the reverse mortgage is these do not get frozen. They get frozen when you pass away. So I'll give you an example. I did some loans in Tampa where before the storm, people took out a reverse mortgage. Now they have a big home equity line of credit. Okay? The house, of course, got demolished, which is okay. The insurance pays to rebuild it. But what do you do in that 6 months to a year interim where you got to make payments? And the answer is they had my reverse. They didn't have to make payments. Plus, they had a line of credit that they were able to live on while the house was being renovated. It was a big, big deal because I know I got a lot of calls from the Tampa area with people who applied, but the house was already demolished. So the answer is no, we couldn't help them. But we've done many loans like that. So the good news about that, and that's a great question, is there's a big difference. And the difference is they will never freeze your line of credit on a reverse mortgage. In fact, the line of credit grows 6 or 7% every year. They're trying to convince you not to use it. So if you have a $100,000 line of credit, the first year that goes up to $107,000, then 14. It grows and grows and grows. They're trying to. So 5-10 years down the road, this $100,000 line of credit may be $200,000, and that's the way that's the difference between the traditional home equity line of credit and the reverse. Plus the fact there's no payments with our reverse. So it's better for a senior because if you're 85 years old, you don't want to take a loan that you can be responsible for 30 years. A lot's going to happen, trust me. Okay, I got a couple of other ones here coming in. Dave from Tamarack, did they hold money escrow for tax and insurance? The answer is yes. If you want out of this money, they can set up an escrow for you. And also that happens with bad credit. I've done a loan in foreclosure where the people had a property in foreclosure and they couldn't get a loan anywhere. We did a reverse, and out of the $250, they held money in taxes and insurance for an escrow, and we were able to close. So the answer is yes. If you choose to do that also, you can do it. Some people want to pay the tax insurance on their own. Some people like the escrow. It's really up to you. Ernest in Fort Lee, can I get more money if I decide later on? And the answer, that's another good question. Ernest, the answer is yes, you can. I did a loan recently for somebody who's 97 years old. Every 5 years, I did 3 reverse mortgages for her. Every 5 years, she refinances. And the reason why is, into a reverse, I should say. It's called a reverse to a reverse. And the reason is she's getting older, and the house is going up in value. And every time, she just takes enough money that she needs for the next couple of years. But she's 97 now, so she started running out of money. We just did a loan for her again, and she borrowed another $100,000. And the answer is yes, because the older you get with a reverse, the more money you qualify for. And we'd like to think your house goes up in value too. Her house keeps on going up. It's in Brooklyn, and it keeps on going up every year. So every year, every 5 years, if she needs money, she calls us, and this is the third reverse we've done for her. And there's no prepayment penalty. It just recasts the loan. So that's a very, very good question. I'm going to take 1 or 2 more, and then we got to move on. That come in pretty good. And also, feel free after this. You'll see my number. We're going to put the number on the screen in post-production. So if you have any questions, feel free to reach out. Call me in the office. I go over everything with you because we're getting a lot of questions in, and I don't have time to answer everything. We like to keep these webinars short because what I find is the longer they are, the people aren't interested. And that's why I brought out the board. Maybe I can show you something a little different today. But Robert from Ronkonkoma, can I sell my house if I want to? The answer is yes, you can. Okay? There's no prepayment penalty. You own your house. You can take out the reverse, sell the house the next day. Okay? People do that. I've had people, bad health, you're in the 80s, anything can happen. Like I always say, there's no prepayment penalty. So, yeah, the answer is yes, you can sell your house, no problem. And it's just like this. Whatever the accrued interest is, say you sell a house the next year, and this goes up, this scenario, the 250 goes up to 260, okay? Whatever you get, 500, whatever, you just deduct the pay off from the reverse, and you get the rest of the money, or your heirs, whatever it may be. So the answer is yes, you can. The reverse mortgages are the most flexible mortgages that you could possibly get for a senior. I always say when people call up, if your house is free and clear and you have $1 million in the bank, we shouldn't have a conversation. You do not need a reverse. But for the average person with inflation, with the cost of living, in-home health care, pay off mortgages, high interest rate credit card debt, or just for the sake of having a line of credit in case of an emergency, just in case, God forbid, the boiler doesn't work, your roof, there's a hurricane, your roof needs replacement. I just did a loan for a gentleman in Florida, and he was young, but he needed $23,000 for a roof. He had a beautiful roof on his house, so he borrowed money for that reason. So everybody's different, and it's the easiest loan to qualify for. Some of them are government insured, some of them aren't. That's a decision you have to make. We have a bunch of different programs depending on how much money you want. Some people want the full amount. Some people want to leave it in a line of credit. So it's up to you. I mean, what we do differently than the other companies is we'll sit and talk with you, and we'll find out the right program for yourself. We'll sit with your kids, and we'll do what's right for you and your family. I got a whole bunch of other questions here, but I'm going to cut it short, and I'll reach out to you guys direct. I see John. I see about Arlene. I'm going to reach out to you guys separately and answer your questions, because I want to keep this to like 15 to 20 minutes, and that's it. But I want to thank you all for tuning in. Hopefully, I explained a little about the reverses with the help of the whiteboard. Okay, I like showing some visuals once in a while so people can understand. And like I said, if you have any questions, you see my name on the screen. We'll put that in post-production. And feel free to call the office. And if I can help you with anything, we're licensed in 4 states: California, New York, New Jersey, and Florida. And every one of those states, we have personal loan officers like myself. And we come and we set the appointments, and we see you face to face and go over everything. So thanks again for tuning in. And thank you for your questions, everybody. And like I said, I'll be reaching out to you individually, and we'll answer all the rest of the questions. Have a good day. God bless.